In January 2024, I decided to take on a simple but powerful challenge, investing $10 every single day for the entire year. I split this equally, $5 into VTI, the Vanguard Total Stock Market ETF, and $5 into SCHD, the Schwab US Dividend Equity ETF. My goal to see how two of the most popular ETFs would stack up over a year of consistent investing. Fast forward to today, and I'm excited to share the results, how much my portfolio has grown, the dividends I earned, and which ETF came out on top. Plus, I'll explain why this $10 a day strategy works for anyone, no matter how much experience or money you have to start with. If you're someone who feels like investing is overwhelming because you don't have thousands of dollars to start, let me tell you, you don't need to. By investing just $10 or $5 or even $2 every single day, you can start building a portfolio that grows over time. Today, I'll show you how small, consistent steps can lead to big results. Let's start with VTI, the Vanguard Total Stock Market ETF. This fund gives you exposure to the entire US stock market, from the largest tech giants to smaller, lesser-known companies. Here's how my $5 daily investment played out in 2024. So my total contributions for 365 days times $5 was $1,825. My account balance on December 31st was $2,007.27 for a total return of $182.27, or 9.9%. Now let's break that return into two parts. The capital appreciation was $166.48, or 9.1%, and the dividends received was $15.79, or just under 1%. VTI does pay dividends. Here's a closer look. On March 27th, it paid me 91 cents per share. At the time, I only owned 1.6 shares, so I earned $1.50. On July 3rd, the dividend was 95 cents per share. I had worked my way up to 3.5 shares, so I earned $3.38. The next dividend paid was on October 1st, and it was 87 cents per share. At the time, I owned 5.2 shares, earning me $4.56. Then the final dividend of 2024 was paid December 26th at 94 cents per share. By that time, I had 6.7 shares, and I earned $6.35. In total, I received $15.79 in dividends, and all of it was reinvested, buying me more shares and compounding my return. VTI delivered solid returns. While dividends played a smaller role here, the capital appreciation drove most of the growth. Remember, VTI tracks the entire US stock market, giving you exposure to thousands of companies across all sectors. If you're looking for broad market growth, VTI is a fantastic option. Now let's talk about SCHD, the Schwab US Dividend Equity ETF. This fund focuses on 100 high-quality dividend-paying companies. Here's how my $5 daily investment into SCHD performed by the end of the year. So my total contributions were the same, $1,825. My account balance on December 31st was $1,905.41 for a total return of $80.41, or about 4.4%. Breaking it down further, the capital appreciation I received was $37.66, or about 2%, and the dividends received was $42.75, or about 2.3%. Here's a closer look at the dividends SCHD paid me. On March 25th, they paid 61 cents per share, and at the time, I owned 5.1 shares, earning me $3.13. On July 1st, SCHD paid 82 cents per share. At the time, I owned 11.4 shares, and I earned $9.41. The third dividend of the year was paid on September 30th, and they paid 75 cents per share. I owned 17.1 shares and earned $12.93. And SCHD's final dividend was paid on December 16th, and they paid only 26 cents per share. That seems different because it was adjusted for a 3-to-1 stock split that occurred in October. That equated to me owning 65.3 shares, and I earned $17.28 in dividends. In total, I received $42.75 in dividends, and all of it was reinvested, buying me more shares and growing my position. As you can see, dividends played a much larger role in SCHD's performance compared to VTI. SCHD is built for income investors, focusing on high-quality dividend-paying companies. If you love seeing consistent income in your portfolio, SCHD is a great option. Now let's compare these ETFs side by side. VTI outperformed SCHD in terms of total returns, driven by strong capital appreciation. SCHD, however, delivered a higher dividend yield, making it a great choice for income-focused investors. But together, they balance growth and income beautifully. Let's take a closer look at what makes up these two ETFs. VTI, well, this fund represents the entire US stock market with over 4,000 stocks. Its largest sector exposures include technology at over 25%, also healthcare, financials, and consumer discretionaries. VTI's top holdings include giants like Apple, Microsoft, Amazon, Nvidia, and Tesla. SCHD, on the other hand, focuses on 100 high-quality dividend-paying companies. Its largest sector exposures include financials at over 20%, followed by technology, consumer staples, and industrials. Its top 10 holdings include companies like Cisco, Home Depot, PepsiCo, and Chevron. Here's why combining VTI and SCHD in your portfolio makes so much sense. Number one is minimal overlap. SCHD focuses on dividend-paying companies, while VTI represents the entire market. This minimizes overlap and enhances diversification. It provides a balanced strategy, with VTI delivering growth potential and SCHD providing consistent income through dividends. Together, they balance growth and stability. Combining the two can provide resilience in different market cycles. During bull markets, VTI's growth focus shines, while SCHD tends to perform better during downturns thanks to its focus on dividend-paying companies. I think this challenge proves you don't need a lot of money to start building wealth. By investing just $10 a day, 5 into VTI and 5 into SCHD, I built a portfolio worth almost $4,000. Imagine if you had started a year ago and invested only $2.50 every day, you'd have a portfolio worth about $1,000. Imagine what that could look like in 10, 20, or even 30 years. The key to investing is consistency. So what's next? For 2025, I'll continue investing $5 every day into both VTI and SCHD. I'm also considering adding another ETF. Let me know in the comments if you have any suggestions for an ETF I could add. I appreciate you watching. If you want more updates on these $5 a day challenges I've been doing, be sure to subscribe. And if you're not sure what to watch next, check out another one of my videos right here. Take care, and I'll see you next time.